Hey everybody, welcome out to this week's market bias update for August 27th, going into the week ahead. Continuing to exercise caution is the name of the game. Obviously had a downtrend start on the daily chart. We are now kind of in the middle of a little bit of a neutral consolidation between the lows of around 43.50 on the S&P 500 and up to about 44.85, or honestly, let's just call that 44.90. Need to be cautious here. On the daily chart, yeah, we have these large body candles showing volatility, showing indecision. One day big up, the other day big down on corresponding news. We are showing a little oversold still on the RSI. We do have the MACD curling up and trying to smile at us here. But until we get back above about 44.90, my base case is honestly that we have some more selling to happen. If we do get back above that, obviously we have to be data dependent, just like J. Old Powell. But if we get back above that and break out higher, I won't be afraid to add to long positions. But right now, I am anticipating that we come up over Monday, Tuesday, test this decreasing 20-period moving average on the daily chart and roll over and at least test these lows around 43.50 again, if not potentially go lower. Like I said, we're going to have to see how price performs at that level. If it does break out, then obviously you have to trade what you see. But I am seeing a lot of bearishness right now. If we go out to the weekly chart here, you'll see weekly chart, the last time that we had an RSI sell-off signal was right back here. And that was right at the top of the market, a year and a half ago now, before we started this big slide. We've been having a little bit of fear come up in the marketplace about double dip inflation coming back. And a lot of that has to do with crude light. People are looking at the crude light chart and expecting that crude light might get some breath back into it and break out to the upside here. If that happens, that will add to price concerns and could lead to a little bit more inflation. We'll get a lot of data this week coming out, so we'll have to see how the data on Tuesday, Wednesday, Thursday, and Friday happen. Thankfully, we have a little bit of a reprieve on Monday. Honestly, for Tuesday, the consumer confidence is the one that I'm looking at for Tuesday here, so that's going to be important. Not really concerned with either of these on Wednesday. Honestly, unemployment claims and core PCE price index are going to be important for Thursday, and ISM manufacturing and unemployment rate for Friday are going to be important. So just a look at the information load coming out to us ahead in terms of news. If we go out to the NASDAQ, it's been trading kind of lock and step with the S&P, showing very similar pattern. Both of them are underneath their rolled over 20. 20 is under 50, price is under 50, and fighting up into the 9. In very similar pattern here. Obviously, if we do end up getting something like this and we come up and test these kind of highs from last week, pull back and or consolidate and then break through, I will be looking at a trigger above the high of this big red candle there. So that'll be around 15,400, 15,420, somewhere right in there. But if instead we come up, hit our head, roll over, and come back down in a little bit deeper of a retracement, honestly, just like the S&P, I think we have a little bit more consolidation and or some selling to go here. And I want to introduce you guys to a couple of really quick indicators that are kind of a big part of why I'm seeing that. So this is the Bollinger Band. Those that aren't familiar with Bollinger Bands, basically you have the 20-period moving average here set as the center line, and then the upper band in red and the lower band in purple. And these are each set one standard deviation away from that 20-period moving average. And let me put this on a little bit longer time frame here. So just zooming in, let's say about the last year or so, you'll notice that when price is moving lower consistently, the price is almost entirely below that center line, the 20-period moving average. Once it clears above it, you can see it kind of struggles. It fights back and forth. It gets above it, can't hold, gets above it, can't hold, gets above it, holds for a while, can't hold, retests this last little point, but then once it does actually get above it and a new trend starts, you can see the number of days that this actually stays below the 20 period moving average, that center line for the Bollinger Bands. There are only very few days that actually get below that line until you reach a potential top, a potential reversal. Just like over here, we had been above it, above it, above it, above it, above it. Once we broke and retested that, we started a intermediate downtrend, and it stayed like that for quite a while until we got a couple of tests back up against the upper band. So right now we have been above it for quite some time. We broke below it. We just tested it once. And if we can get back above it, that is great. That signs for the bulls. But if we hit our head on that and roll back over, that to me shows that this is a new start to a trend lower, and that we need to be very cautious with any long trades we take and start looking to sell covered calls more aggressively and or look for protection on our accounts in other ways, either moving to cash or buying put options or finding certain shorting strategies in the marketplace. So this is a really important piece to that. And then the other piece that I want to show you really quick, you'll notice these dots, these blue and purple dots. And this is an indicator called ATR trailing stop. And I've modified this one a little bit. I have it set for a 1.3 ATR, so 30% above or below the normal ATR, and then 14 days. So it's calculating over the last 14 candles of price data. And you'll notice that when we are in a bullish uptrend, these dots are all below the price action and they are blue. When we start pulling back and start moving lower, they turn purple. You'll also notice on this price graph that all of these candles are very beautiful, I guess is the best word I can come up with, in terms, or consistent. There we go. Jeez. Sorry, guys. It's been a long week. They're very consistent. So this turned red, turned green, turned red. We are going to be bearish until we see this turn green again. And this is a study, actually not even a study, it's a type of candlestick chart called an Heikin-Ashi candlestick chart. This is a twist on normal Japanese candlesticks that modifies how the open, close, low, and high are calculated, and it gives you a little bit more of a smoothing action on the chart. So you'll notice they don't tend to fluctuate very regularly. You only have one or two candles where they switch color and then switch right back, and usually that's a little bit of an indecision. But right now we have bearish confirmation on this, and I'm just kind of waiting to see, does this turn to green and move higher and confirm off of this 20 period moving average on the weekly as a new higher low, or does it break down and break that 20 on the weekly chart, which does kind of correspond with the lower bounds of the price here, because we just confirmed off of it on the weekly chart. So the 20 period SMA is kind of down here equal to these lows. If we do break that, to me, it's lookout below, and this is now a confirmation of a new lower low and new higher, or lower high, excuse me. So anyways, just wanted to show those two indicators. I really like using them in conjunction with the RSI and the MACD that you'll see here. So on Thinkorswim, I have them set so I can just kind of toggle back and forth between my charts right there. Going out to the Russell, the Russell's in an interesting spot. We're going to look at this on a weekly chart. So right now we've had this long-term consolidation for the better part of a year, and we are sitting right on top of the 50 period moving average and below the 200 period moving average on the weekly chart. So you'll see I have alerts set for 1884 and 1832. Those are kind of my lines in the sand. If we get back above 1884 and close above that, I will be looking for prices to come back up and retest this kind of triple top that we have just above 2000, about 2018, it looks like. If we close below this, my base case is coming back down and retesting the lows around 1700. And then finally, let's look at the Dow Jones super quick. Not a whole lot to see here. It is fighting for support on the 20. I don't think there's a trade here. I am mostly interested in playing one direction or the other on the Russell 2000, and then potentially playing the NASDAQ if it does end up breaking down here, just because I feel like there is a decent amount of room. There's a nice pocket there to the downside. Going out to crude light real quick. Crude light has been pulling back the last 3 weeks. We are starting to see a little bit more of a hesitation, especially on the daily chart. You can see we popped back up above the 9. Really, we need 4 or 5 days probably for this to consolidate sideways. If it does hold tight in here against the 20 and then breaks above, I will be looking to add. But if we pop back to the 20 here and then immediately start to roll over again, my base case is going to be back down to around 77. Looking out to natural gas. Natural gas has been consolidating. Shocker, right? It has been just in this wild whipsaw range. To me, it does still look like a longer term bottoming pattern. It has fought back above some of the moving averages on the weekly chart here, so that is good. We do have improved MACD conditions and RSI conditions, but I think this needs more time, to be completely honest. Hopefully this week we will see a nice green weekly candle close above the 9 here and above the trigger point, the high of last week's candle. If we do get a close above that, to me, that signals off to the races. But until we get a close back above here at $2.66, it's kind of anybody's guess. Finally, let's go out to the dollar. The dollar is a big part of the reason that the markets have been struggling here recently. You can see we've just been on a tear on the dollar. And if this thing continues to just go parabolic, it is going to feed into that thesis of the markets continuing to struggle and continuing to sell off. We have gotten up to the point where we are overextended more so than we have really been at any point in the last year. I am expecting, hopefully, this thing to go sideways and or pull back some. We'll really have to check to see how it performs at 2870. And if we can get back below 2870, that would be bullish for the market. But as long as we're up here in this just 45-degree angle straight up mentality, that is going to make it really, really hard for the markets to break out and come back into bullish mode. Finally, looking at our internals here, the 20-period SMA here on our advanced decliners is solidly below the 0 line, so that is bearish. And if we go out to our AR high-low chart, 2 closes in a row below at -50 is our signal for being bearish. You can see we got that back on 8/8. And so for the last about 3 weeks, we have been below that and confirming bearish on here. And as we close out, just to show you, 3 weeks ago on 8/8 would have been right here. So this was the candle right there where we signaled on our market indicators that we were needing to lean more bearish. And yes, we have been bearish since then. We did have this little rally, but it came up, and this could be kind of a kiss and death situation where we broke, come back up and give one last hurrah, test, can't hold it. If we do roll over, my base case is back down to the 200-period moving average. Anyways, I hope that helps, guys. Trade safe. Be cautious this week, as always. Use your stops. Do not enter trades without having stops on. And at least for me, I am going to be very, very cautious, looking mostly at the Russell 2000 to break one way or the other, because I think that has the cleanest triggers. And then secondarily in individual setups in the NASDAQ and probably the S&P as well. Hope that helps.